Towards the end of 2018, you mentioned that you guarantee you could make a 50% annual return if you had to start again with under $1 million. What method or methods would you use to achieve that return?
Good question. I'm glad you came. And the answer would be, in my particular case, it would be going through the 20,000 pages. And since we were talking about railroads, I went through the Moody's Transportation Manual a couple of times. That was 1,500 or 2,000 pages, or probably 1,500 pages. And I found all kinds of interesting things when I was 50 or when I was 20 or 21. And I don't imagine there's anybody here that knows about the Green Bay and Western Railroad Company, but there were hundreds and hundreds of railroad companies, and I like to read about every one of them. To answer your question, I don't know what the equivalent of Moody's manuals or anything would be now, but I would try and know everything about everything small, and I would find something. And with $1 million, you could earn 50% a year, but you have to be in love with the subject. You can't just be in love with the money. You really got to just find it like essentially like, people find other things in other fields because they just love looking for it. A biologist looks for something because they want to find something. And that's built into. I don't know how the human brain works that much, and I don't think anybody understands too well how the human brain works. But there's different people that just find it exciting to expand their knowledge in a given area. I know great bridge players. I know great chess players. Actually, Kasparov came to Omaha and met Mrs. B. I've had the luck of meeting a lot of people that are unbelievably smart in their own arena and do some unbelievably dumb things in other areas. So all I know is the human brain is complicated, but it does its best when you find out what your brain is really suited for, and then you just pound the hell out of it from that point. And that's what I would be doing if I had a small amount of money and I wanted to make 50% a year, but I also wanted to just play the game. And you can't do it if you don't find the game of interest, whether it's bridge or whatever it may be, chess, or in this case, finding securities that are undervalued. But it sounds to me like you're on the right track. I mean, anybody that'll come all the way to this annual meeting has got something in their mind other than bridge or chess. So I'm glad you came, and come again next year.
So Warren Buffett just said that if he had less than $1 million in 2024, he could potentially earn an impressive 50% per year, right? And although this is exciting, it also presents a big challenge for the average investor. So let me explain. So Warren Buffett's success is rooted in deep market research and a lot of experience and understanding of the market to uncover hidden opportunities. However, in today's world where information is widely available and AI is at our fingertips, finding overlooked investments is tougher than ever, right? So the question is, do you as an average investor have the passion and dedication needed to identify the best investment opportunities, and are you able to get higher average returns than the market? Because let's be real here, investing without sufficient knowledge can be very risky as well and may lead to losing all of your money. So consider this. Warren Buffett has achieved compounded annual gains of 19.8% from 1965 to 2023 with his company Berkshire Hathaway. So he significantly outperformed the S&P 500 10.2% return over the same period. And that is massive. Yet Buffett also has said that the most investors will not achieve significant success, because he also noted that about 98% of investors may fail, while only 2% will see notable success. And Buffett also advised his wife to invest in low-cost S&P 500 index fund from, for example, Vanguard. Given this advice, the question is, what is the best approach if you have 1 million but lack Buffett's dedication? I haven't been in the financial industry for over 15 years and work with a lot of average investors, but also professional asset managers. And I've seen firsthand that successful investing requires more than just intelligence. It demands discipline. It means disciplining your mind to do the opposite of human nature. And that's tough. Buying during panic, selling during euphoria, and holding on when you are bored and just craving a little of action. So is this even possible? So are investors and professional asset managers able to outperform the market with passion and dedication? And if you have $1 million, should you dive into stocks now or wait for a market crash? In the next video, I will share my answer and it might surprise you.